Hey guys, how's it going? It's Andy from Magoo Investing. Happy Friday. This week has been pretty interesting overall. We started the week out with a solid green day. We had Tesla up over 13%, the Dow Jones is up 2% and was actually leading the overall market. And then I went and played golf, had a horrible round, and I think that kind of jinxed the market a little bit. Because when I came back, we saw some massive selling towards the end of the day. The Dow was in the red and the NASDAQ was down around 2.5%. And we've seen a pretty interesting week besides that. We've seen a lot of selling pressure. We've seen days like yesterday where the market was pretty far in the red and then it kind of boosted towards the end of the day and was down around 0.5 to around 1%. But we've seen some interesting moves where we've seen the sellers have really been taking over the market, which is something we've not seen very recently. It's been a lot of green days in a row, and this week it kind of feels like things are flipping a little bit. And for the first time in a while, the Dow Jones has been outperforming the NASDAQ. The NASDAQ is the tech-heavy index, which has been just crushing it so far this year. Many of these tech stocks are up significantly so far this year, and as I mentioned a couple videos ago, the discrepancy between the NASDAQ and the Dow Jones performance is the largest it's been since the dot-com bubble. And so this week, the NASDAQ has been in the red most days, while the Dow Jones has been pushing up the market overall. And so in today's video, I wanted to talk about some news stories that came out this week that are making me more worried about the stock market crashing overall. We're going to be talking about some specific stocks as we're starting to get into the earnings reports for this past quarter. And we're starting to see some interesting numbers so far, and this might be the beginning of kind of the cracks forming in the overall market, and I'm starting to get more wary. And then we're going to be finishing up the video talking about some of the options positions that I took just a week and a half ago. These were quick options that are going to be expiring today and next week, and I'm going to be explaining how they went overall and talk about what I'm going to be doing with that money going forward. Before getting started, I have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just my own opinion, and you need to do your own research before taking any positions in the stock market. Also, if you've been enjoying these videos, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. We had 5,000 subscribers recently, and thank you all for the support. So if you've been around this channel at all, you might start thinking that I'm the guy that has been crying stock market crash. This is the second or third video I've made recently talking about why I'm worried that a crash is going to be happening. While we haven't seen this really happen fully, the market has not crashed. We're starting to see some cracks in the market, and the more news events that come out, the more worried I'm getting. So as we all know, we are in the middle of a global pandemic, which is starting to shift towards a domestic pandemic. And with that going on, we're seeing record numbers. The stock market is at all-time highs, and that just kind of worries me overall. It just doesn't make any sense. And while I've talked about the disconnect between the stock market and everything going on in the world, I'm starting to get more worried. And if I had to put a finger on two sectors that I'm going to be watching as the potential start of a market crash, it's going to be the bank stocks and the FAANG stocks. So first, let's talk about the bank stocks. These were the first sector to announce their earnings for this past quarter, and we talked about what happened with Wells Fargo and JPM Morgan on Wednesday, but I'll just give a quick recap on that. Wells Fargo had some poor earnings, and one of the interesting stories that came out of that is that they failed the stress test that was put in by the Federal Reserve after the last financial crisis to protect banks to make sure that they have enough money on hand to protect themselves during an economic downturn. And so as a result of that, they were forced to cut their dividend, which is the first time that's actually happened, and they were the only bank stock to fail that test. And then JP Morgan came out with their earnings, which were actually much better than expected. A lot of the positives came from their investment bank areas, which posted a $5 billion profit, which is more than a lot of the banks make overall. And then yesterday, Bank of America announced their earnings, ticker symbol BAC, and they did all right on their earnings, but the market is not liking how much money that they're setting aside in loan provisions. So far this week, we've seen these bank stocks taking out between $5 and $10 billion in loan protection as they're worried about the ramifications of an economic downturn. And so as we're seeing some of these major bank stocks kind of prepare for the worst, it kind of counteracts a lot of the optimism that we've been seeing in the overall stock market. If you've been looking around this week, we've seen some vaccine news that has been pushing the market up. But at this point, the bank stocks are kind of fearing for the worst. So I'm leaning towards that instead of the news about these first and second trials of a vaccine that's still going to be 6+ months away. And now to get off the doom and gloom, let's talk about a positive news story that came out of China, with the fact that they released their economic data for this past quarter, and they posted a 3.2% growth in GDP from the last quarter, which is actually the first country to post a positive GDP growth since the pandemic hit. This came after the past quarter where China posted a 6.8% contraction in their GDP growth, which is actually the first time since before 2000 that they've posted negative GDP growth, and that's almost 7% was pretty startling. But we've talked recently on this channel about the crazy numbers that were coming out of stocks like JD.com, ticker symbol JD, and Alibaba, ticker symbol BABA, with their summer sales that had record numbers and record volume of transactions. And so I'm not super surprised to hear that China had a positive increase in GDP growth in the last quarter. But I am starting to see some news stories talking about how the production in China is ramping up to pretty much normal levels, but they're having some problems with the international demand, and they're having some of their inventory start to pile up as international markets aren't buying as much as previously expected. And so overall, this is not something I'm super worried about, but I think it's really interesting to see some of the events that are coming out of China with how quickly they've rebounded with their economic growth, and the fact that they're starting to see some problems with the international markets. China is the second largest market overall, and the fact that they're having some problems with their inventory starting to pile up could be a warning sign. It's not something that I'm going to be putting towards the top of my list on reasons why the market's going to crash, but it's something that's just kind of adding on to a lot of other factors that we've been seeing. But the news event that came out on Thursday that was the most interesting to me was Netflix announced their earnings, and it was not as good as people expected. While they beat on areas like revenue, they had some problems with their subscriber growth going into the future, and the market did not like that. As a result of those numbers, the market pushed the stock down over 10% after hours yesterday. The main number that the analysts were looking at is the fact that Netflix said that they expected $2.5 million addition in their subscribers in the next quarter when the market expected $5 million, and that is a huge miss. And going forward, let's talk about the FAANG stocks. FAANG is an acronym, FAANG, which stands for Facebook, Amazon, Apple, Netflix, and Google. And these are 5 of the largest tech companies in the world. If you add Microsoft in there, I think that's probably the most powerful group of stocks you can find, but they are the main movers in the overall stock market. I talked in a video pretty recently talking about the weighting on the S&P 500. It's not an equal distribution between all 505 stocks. It's based on market cap. And for the first time since the 1960s, the top 5 stocks in the S&P 500 are making up more than 25% of the overall index. What that means is these stocks have so much weight and have so much influence on how the stock market's going to move. And now we've had Netflix being the first FAANG stock to release earnings, and they were not very good. So going forward, I'm watching these FAANG stocks to see how their earnings reports are going to be. If we start seeing some misses towards the downside, I'm expecting the market to follow overall because of just how much weight they have in the way that the market moves. These 5 stocks plus Microsoft have been some of the top performers in the market overall, with 4 out of 5 of the FAANG stocks besides Google posting all-time highs pretty recently, and Microsoft has just been chugging along. It'll be very interesting to watch companies like Apple that have a heavy reliance on China to see how they're doing overall. As I mentioned, a lot of these major companies have cut guidance, so a lot of these analysts are kind of flying blind into these earnings reports. And so that's one of the reasons why I think we could see some large moves to the downside if these massive companies miss on their earnings report. We've been seeing so much optimism in the stock market for the past couple months, but once we start seeing these major companies miss on their earnings report, I think that's when the momentum is going to finally stop towards the upside, and we're going to see the market start to slide lower. Take that into account with how overextended the NASDAQ is right now, and I'm expecting to see some violent moves to the downside if we get some misses on these earnings report. We do have some other major companies in the next couple weeks announcing earnings. Next week, I'm going to be specifically watching Coca-Cola, ticker symbol KO, and Disney because they are 2 major companies. Some of them, like Disney, have a lot to do with reopening in the United States, and then Coca-Cola is one of these consumer staple products, and it'll be very interesting to see how they performed in the past quarter. All right, with that out of the way, let's talk about the 2 options positions that I took last week and explain what's happened so far. And so I've talked in the past couple videos about how I'm very worried about the market crashing overall. But in my opinion, I don't think that's going to happen until the end of the month, as that's when a lot of the protections that came from the CARES Act are set to expire, stuff like the extra unemployment benefits. So I saw an opportunity to sell short-term puts on Sonos and FCX, which is a company that I've traded a lot in the past. So this gave me the opportunity to make around $200 in profit with limited exposure to the overall market. At this point, Sonos has increased just like I expected, and I have realized around 95% of that overall option price, and it's set to expire today, and I expect to get the 100% of my premium paid out in full. I know my FCX position, it's up around 75% with 7 days to go until expiration, and at this point, it's unlikely that I'm going to get assigned. And what this means is that 60% of my portfolio is going to be sitting in cash again. I saw this opportunity to take a quick $200 profit and still not have as much exposure to the market as a lot of people who are buying just straight stocks would have at this point. So right now, I'm just going to be waiting on the sidelines to see if some of these predictions that I've had about the overall market are going to come true. At this point, you really never know, and the momentum has just continued to go up in the stock market, and if I miss out on some potential gains, I'm totally okay with it. So let me know what you guys have to say about some of the news stories I talked about today. And let me know what you think is going to be the biggest decider on if the stock market is going to crash. Let me know in the comment section down below. Thanks for watching these videos. I have a fun project that I'm working on this weekend that should be out hopefully by the end of the month. Thanks for watching these videos. Appreciate all the support, and I will see you on Monday.